On 1st January 2007, Hare Ram Limited issued debentures of rupees 1 lakh redeemable at par at the end of 5 years. It was resolved that a sinking fund should be formed and invested in tax-free securities. Show necessary ledger accounts for 5 years, assuming that the interest received on investment was at the rate of 5% on cost, that the interest was received yearly and immediately invested, and the investments were realized at a loss of rupees 300 at the end of 5th year. A reference to the table shows that rupees 0.180975 invested at the end of each year at 5% compound interest will produce rupees 1 at the end of the 5 year. Solution. This problem is about redemption of debenture which is redeemable at par. It is redeemable at par means what is the nominal value of the debenture, at the same amount it is going to be repaid. So first let us calculate the amount to be appropriated from profit every year installment. That installment from profit is equal to 1 lakh rupees. 1 lakh rupees into 0.180975, that equal to 18,097.50. This is the amount which we are going to invest keep aside in fund, and we are going to invest that in government securities. So here question is show necessary ledger accounts for 5 years. So necessary ledger accounts in the means we have to prepare first debenture account, then debenture holders account. If you want you can prepare it first, or you can prepare at the end also. Debenture holders account, sinking fund investment account, and if you want you can prepare bank account, any other account, because they have not mentioned which are the accounts to be prepared. They have given prepare necessary ledger account. So first we will prepare debenture account. It is an account of debit and credit. So it starts with bank account. First we are receiving money, so bank account debtor to debenture account. So bank account will be coming in the buy side. In the debenture account, buy bank account 1 lakh rupees. So same amount will be transferred or carried forward to the next year. So in the debit side, 2 balance carried on, and same entries are going to be repeat for 4 years. 4 years same entries, buy balance carried down, 2 balance carried down. Once again next year 3rd year, buy balance carried down, 2 balance carried down. Once again 4th year, buy balance carried down, 2 balance carried down. So 5th year is the year of repayment. So that year first we write buy balance brought down in the credit side, that is 1 lakh rupees. After that we transfer that to debenture holders account by giving debit to debenture holders account 1 lakh rupees. So debenture account is over for 5 years. Next, debenture holders account. Debenture holders account, just you transfer from the debenture account to debenture holder account. See, in the last year 5th year, in the debit side there is 2 debenture holder account. So that you just transfer by writing in the opposite side, that is by debenture account 1 lakh rupees. And that amount is going to be paid to the debenture holders. So that account is closed by writing 2 bank account in the debit side, same 1 lakh rupees, because it is redeemed at par, not at discount, not at premium. It is redeemed at par means same amount. So 1 lakh rupees is the total of the account. Next, let us go to sinking fund account. Debenture redemption sinking fund account. Otherwise, just you write sinking fund account. So first we will write the appropriation from profit. That will be by profit and loss appropriation account. The amount which we have already calculated, that is 18,097.50, that we write in buy side. So same amount will be carried on to the second year. So in debit side we write 2 balance carried on 18,097.50. So same amount we carry to second year, by balance brought down 18,097.50. Next, we'll go to second year. We have carried the balance. After that, we'll write the interest. Interest on sinking fund investment account, that is given, whatever the percentage given in the problem, that is 5%. 5% on 18,097.50, that comes to 904.87. So that is the interest on the amount which we have invested in the end of first year. We are going to get interest for that in the second year. That also will be invested. So after that we'll write the next appropriation. Once again the second installment by profit and loss appropriation account 18,097.50. Total of the account is 37,099.87. So we'll carry the amount to the third year. So credit side of third year by balance brought down. You write the just year also if you can write in the date column, or otherwise you can write first year, second year, third year. You need not exactly specify the date. By balance brought down 37,099.87. After that again interest on that amount, it is once again interest on sinking fund investment account 5% on 37,099.87. That comes to 1,855. Again the next installment by profit and loss appropriation account 18,097.50. The total of the account is 57,052.37. That amount will be carried on to the next year by balance brought down 57,052.37. Once again interest on sinking fund investment, that is 5% on 57,052.37. that comes to 2,852.62. Once again fourth installment, that is by profit and loss appropriation account, same amount 18,097.50. Total of the account is 78,002.49. That will be carried to the last year, that is fifth year. Fifth year you should be very careful. Fifth year by balance brought down 78,002.49. After that interest on sinking fund investment account, that is 5% on 78,002.49. that comes to 3,900.12. Next installment by profit and loss appropriation account 18,097.50. Here we have to stop. Closing entries of fund account we will write after writing investment account. So let us go to sinking fund investment account. In sinking fund investment account, first we are going to deposit the investment installment amount in the bank. So it comes in the debit side first year to bank account 18,000. Here they have not given in the multiples of 100, 10 and all. So we can write as it is the same amount. If they give multiples of 10, we have to keep the last digit 0. If they give multiples of 100, then we have to keep last 2 digits 0. So here they have not mentioned anything. So we are investing as it is. So 18,097.50 in the first year we have to invest. That amount will be carried down to the next year. So second year it is to balance brought down. First year what we have invested, that is 18,097.50. Then again we are going to invest in the second year, that is the interest and installment together. That is second year it is 18,097.50 plus 904.87. that comes to 19,002.37. That amount also will be carried down to the next year. Total comes to 37,099.87. So second year completed, we'll go to third year. Third year balance will be brought down. Debit side to balance brought down 37,099.87. After that balance is 37,099.87. Again we are going to invest the interest and the installment, that is to bank account, that is 19,962.50. Total of that year is 57,052.37. That amount will be carried on to the fourth year. Fourth year again it is to balance brought down, that is 57,052.37. Again we are investing the installment and the interest of the previous year, that is 20,950 plus 12. That total comes to 78,002.49. So we'll carry that to fifth year. Fifth year you should be very careful. Fifth year balance brought down, debit side balance brought down 78,002.49. Now fifth year investment realized. Investment realized at a loss of 300 rupees. It is given in the problem. See, investment were realized at a loss of 300 at the end of fifth year. That means what is the amount balance brought down in the beginning of the fifth year? From that 300 rupees you have to minus 300 rupees. That is the amount we are going to get by selling the investment. So in the credit side by bank account investment realized 78,002.49 minus 300. It is realized at a loss of 300 means you have to deduct. So minus 300, that comes to 77,702.49. So here it is realized at a loss. So the remaining amount, that is a balancing figure, that has to be transferred to sinking fund account. That is loss on sale of investment, that is loss of 300 rupees. Together the total of the account is 78,002.49. Now you have to close the fund account. Bring that loss on sale of investment of that 300 to the opposite side, that is in the sinking fund account, to sinking fund account 300. That is the loss on sale of investment. It is in the sinking fund account. Sinking fund investment, it is transferred to sinking fund account. It is 300. After that, remaining amount, there is no loss on issue because that debenture is not going to be redeemed at premium. So there is no loss on issue. So total whatever amount is transferred to general reserve account, that is balancing figure 99,700.11 is the balancing figure. That is the final amount. So here we can't prepare bank account because they have given prepare necessary ledger accounts. To prepare necessary ledger account, we should know the bank balance. In the beginning, what is the bank balance amount? That is not given. So we can't prepare bank account. Then let us go to one more account, that is the interest on sinking fund investment. Sometimes this is asked. Interest on sinking fund investment. First we are transferring the interest of first year, where interest we have written second year from sinking fund account. You see the second year of sinking fund account. In that credit side we have written by interest on sinking fund investment account. So that will be by sinking fund account. It is in the buy side. So in the interest on sinking fund investment account, it comes to two side. So two side, it is two sinking fund account. What is the interest amount? We have written 904.87. That will be transferred to sinking fund account, and to sinking fund account that will be closed by giving by bank account 9,400.87. Same entries every year, but it starts from the second year. First year there is no interest as we are investing at the end of the first year. So second year onwards, all the 4 years interest will be transferred to interest on sinking fund investment account by writing the same entry both the side, to sinking fund account in the debit side and by bank account in the credit side. And every year with the amount of interest what is there in your sinking fund account, we can find the interest in sinking fund account from second year onwards in the buy side. Buy side we are writing by interest on sinking fund investment account. That amount we have to transfer all the 4 years to interest on sinking fund investment account. That is the interest on sinking fund investment account.